morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is April 14th, 2013. Lots to talk about, so let's get started. First of all, thank you very much for hitting that like button and taking the time out of your day to watch these videos. As always, I always do appreciate it, and I never want to stop letting you guys know how much I appreciate it before every video. In any case, this is let's just get right into it. As always, or not as always, but from moving forward from the last few videos, what I want to do is just give you a general synopsis. I guess that's the word, or a general analysis of the SPY. And then get into the other stuff if I want to do any type of ranting or talk about stocks in general, because these videos always turn out to be long. The SPY, because it is the S&P 500. If that's all you want these videos for, then I'm gonna do that first, and then I'll move on to other things, and you can just turn the video off after that if you want to. Okay, digging right into it. So what happened this week? This week we actually broke through the 157 level over here. We hit it twice, and this is what I mean by after you hit it once, it's not as strong, and I really don't trust these levels as much. And this is a perfect example why. So we come close to it. We didn't actually tag it, but close is a tag for me. So after that, I really don't want to trust it as much. But it's always a possibility that you could hit it 5 times before it actually breaks through. In this case, we actually go right into the 157 level. We get a small pullback. This pullback coincides with this bottom trend line here. We're going right into the 154.10 level, and this was the area that I was watching to see if we would actually close below this level here, and we did not. They were able to save it and bring it above this trend line, keeping the momentum higher. Once we got into the 157 level intraday, we did get a small pullback, but it didn't hold. The next day, we broke right through it, and we broke through it on higher volume. You see that? So when you break through anything, and this is a level here, the 157, you have pivot, and another intraday pivot here. When you do it on another day with higher volume, then that normally indicates that the market wants to go higher. Again, I can be as stubborn as anybody else and say that this market is tired and it's going to need to pull back, and I still believe that. I still believe that this is being done by manipulation. Oh, by the way, just to let you know, I was stopped out. I did take a short, I believe around this area in the previous video that you guys saw, and I was stopped out a couple of days later, and that's why my stops are break-even stops. So although I was in the money and I could have took my money and ran, I just had a break-even stop in there, and I got stopped out break-even, which means it was basically like I never even took the trade in the first place. And then I wait for the next level. I didn't get another level here. Looks like it already pulled back. I predicted this pullback on Friday here, and I'll show you how. But before I get into that, again, I just want to do an analysis on the SPY for those of you who don't have very much time. This is the interesting part here. I've been keeping an eye on this bottom trend line here for a while. And again, the story hasn't changed. In case there's new viewers watching this video, if you get a close below this bottom trend line here, and the next day you close below the low of that previous day, then we're looking at the 154.10 level as being some support, but ultimately the support will be around this area here. We have a gap window, a gap fill, and this pivot point all around this area right here is going to be where you're going to have some support for a possible bounce. But if we do get it under the 154.10 level, then that could be the point of no return as far as the market having its correction. Now the problem I have with the market right now is it hasn't had its correction yet, and a correction in the market is, I wouldn't say necessarily say needed, but it is healthy. And right now it's doing things that aren't very healthy. So the longer we push higher, the bigger the correction may be. So just keep your eye out on this bottom trend line here. Now if I duplicate this bottom trend line here, what I can easily do is bring this trend line all the way up here just like that, and you'll see a resistance trend line up here. Now this isn't a very beautiful or very nice trend line, but it is definitely going to be a resistance trend line. So keep your eye on that. We haven't gotten close to it yet, I wouldn't say that indicates anything other than the fact that if we do get up into this trend line, then we may actually pull back. So look, I guess the question you guys have for me next week would be what's going to happen in the markets. Well, like I said in the previous video, this past week would have been volatile because it was the beginning of the earnings seasons, and not only that, we had a lot of news that came out this week, and so we had a lot of volatility. We had volatility in intraday as well as this huge pop. I mean, just straight green, all green candles for the past, I don't know how many days, 1, 2, 3, 4, 5, 6, 7 days. Um, in addition to that, next week is the third Friday of this month, which means that this Friday or this coming Friday will be the Friday that options expire. Anytime options expire, you're going to have within that week a lot of volatility. And the reason for that is simply because the institutions are the ones writing the contracts, not you. Well, theoretic or technically you guys can write contracts. I'm not saying you guys wouldn't. I mean, there's a lot of plays and strategies that in which case you would be writing contracts. However, the majority of written contracts are made by institutions and not by the retail trader. And so the institutions are going to be the ones who are going to do those the price what was that the price pinning in the markets. Basically what's the whole point of how the volatility is going to work this week is based upon how much money the institutions want to lose. They have a database of how many contracts they have written, and they can calculate via just a computer and a click of a button of how much money they're going to lose on each contract that they write. So basically, they're going to manipulate the market as much as they possibly can because they actually have the money to do so. I don't know of any retail trader that has that ability because I obviously need millions and billions of dollars to do it. What they'll do is they'll manipulate the markets, so you either sell your contracts or you hold on to it until they expire as much as possible. That's what the markets want to do. Not the markets, but the institutions want to do, so they don't lose a lot of money and or make as much money as possible as they possibly can with the given scenario that they have. So just keep that in mind that next week should be a volatile week, probably just as volatile as this past week. Next week we also have the continuation of earnings. This is based on volume, what we should expect next week to be as far as earnings release. So you guys can just pause this video if you want to have a quick look, or just jump on finviz.com to see who is releasing earnings tomorrow. And to be honest, if you are a earnings player, I am not myself an earnings player, but if you are, then these are the stocks that are probably going to be having the volatility for next week, or actually Monday, in fact. Here's a better shot of the next 5 days of what we should expect as far as earnings. Okay. All right. So, what does everybody think? Okay, so that's pretty much what I think is going to happen for next week. Just keep in mind that there will be a lot of manipulation next week. So, as far as the SPY pulling back, that remains to be seen. Okay, so just keep that in mind that we have earnings plus two, we have the week that options expire. So there's going to be quite a bit of volatility in most cases. Okay, so just keep that in mind. All right, so what should we look for on the upside? Well, like I said, I don't know if we're gonna get here, but I do have a calculation here which is 165.80, and we do also have a trend line around this area here as well. So we just want to keep an eye on that, and I'll show you where we get that trend line from. But if I just delete this trend line here and I draw another straight trend line there, it brings it a little bit closer to this pivot point here, and I actually like this trend line that I just drew here a lot better than the one if I replicated the one on the bottom here. But I just wanted to show you guys that that I see that pretty interesting. As we all know, trend line drawing is an art and everybody does it differently, but I like it where it's more precise and forgiving. So the question probably everybody has is, could we go higher? Well, as always, we have to listen to the technical analysis and not the news. And here it is. In my opinion, the trend is still up. There's no doubt about that. But at any time, the trend could change. Okay, so just keep that in mind. So if you are long the market, just have your stops in place. You're in the money stops. You shouldn't have break-even stops at this point. I mean, depending on where you are around here. Now, you shouldn't have been stopped out either. So just keep riding the market up and up. What I'm trying to do is catch the top, and then short the market all the way down. So that's my goal, and that's why I keep stopping out break even, um, which is not really a big deal. It's not like I'm losing money. So um, in a sense, I'm looking for the big money, but not necessarily gambling. Gambling, if using technical analysis, to me it's not gambling. It's just like the movie 21. You're putting the odds in your favor. So let's take a look at the upper trend line here before I get into too much of a rant. The reason why I put that trend line in here is because if I scroll back, you can see these pivot points all the way back here, all the way back from 2008. You have a pivot point here. Okay, so from the year 2008, and then we have 2010, 2011, and then now we're in the year of 2013. 2012 didn't have very much, didn't have a pivot in there, but now we're in 2013. Oh, that look kind of terrible here. Anyways, and then we have this trend line all the way up here, coinciding with the 165.80 level. Again, I'm not saying that we're going to get there, but if we do, I would definitely be taking probably a short trade at that point. Now, if we break down again the 154.10 level, a break of that 154.10 level is what we would be looking for, or at least what I would be looking for. All right. So if that's pretty much it for the SPY, you can close this video if you don't want to hear anything else. Is fine with me. Um, Now, how did I know that Friday's day would probably be a down day? We had a minus 39 cents, which is not a big deal, but intraday we were down almost over $1. Okay, so let's just, speaking of which, let's just switch over to the dollar and I'll show you what happened. All right, this is a chart of the UUP, which is the US dollar. What I did was I posted this on Facebook stating that we would probably see a small, somewhat of a bounce on the dollar around this area because we had that doji type candle, and so Friday we could, if that happens, on Friday we could probably see a pullback in the markets because the dollar is inverse to the markets. So if you guys haven't signed up or liked the Facebook page, I haven't been as active as I would have liked to be because um, unfortunately, I'm unbelievably busy and I wasn't able to really post as much as I would have liked to on the Facebook page. But the more people that hit that like button, then the more it gets me to want to be more active. You know, it just only makes sense. Just like these YouTube videos, the more subscribers I get, the more active I'd want to be. But in any case, to make a long story short, we do the 7 minute market update does have a Facebook page. You guys can take a look at that and hit that like button if you want to. The like button does nothing for me other than that every time I post something, it'll end up on your Facebook page. Other than that, it's not like I make money or anything like that. Same with these videos. I do not make any money, so you don't have to worry about anything like that. So let's take a look at this UUP. In the video, not in the video, in the Facebook, I did post that the UUP would probably see some support around this area over here, because especially because we had this doji candle, and that's why we got that pullback in the market. So it does say we have a -3 on the UUP, but again, the dollar, it's not gonna be for penny for penny or tick for tick. It's just going to be in general. If the dollar is up, then the markets will be down, and vice versa. The markets did have the bounce here, which is why we had the pullback towards the end of the in the beginning of the so we had the pullback in the beginning of the day, and then towards the end of the day we got that bounce. The markets tried to recover because then the markets pulled back. Does that make sense? Yes, hopefully it does. In any case, we still have some room to go on the dollar. We have not hit the 50 moving average yet. We are close, and we do have this 22.26 level here to be aware of. Okay, this level was created back in September 21st. So just keep your eye on that, and we should get some support around this area here. Which means the beginning of the week we could see more upside in the market, and if we do get a bounce, then on this 22.26 level, no guarantees, because again, this level has been used and abused. It's been from last year that I created this level. So if this level does in fact hold, then we should see that pullback in the markets. Okay, so just keep that in mind. The beginning of the week we could get some upside and then some downside, so that remains to be seen. And that's on a normal week. Again, next week is going to be a lot of volatility because of the options expiring on Friday, as well as earnings. All right, now we can get into talking about stocks and maybe other possible ETFs. I tried to do this in the previous video and we went into about 40 minutes. I'm just going to rip right through it as fast as possible because I missed some that I wish I had included in the previous videos. Like one of them was, I believe, HP. This is the daily chart of HP. The symbol is HPQ. When I load the drawings here, this was one that I swore I had posted on Facebook. I don't know if I did or if I didn't. Let me just take a quick look here. Okay, yeah, I didn't post this chart on Facebook, unfortunately, but I was going to post this chart on Facebook, I believe, on the day I created this calculation, which was on the 9th. Okay, and geez, I've I apologize for not doing it, but I normally don't play consolidation patterns, all right? But this is a beautiful, beautiful consolidation, almost picture perfect consolidation. And the reason why I like this chart was it was right under the 20 moving average, and the 50 moving average had a long ways more to go. So I decided to create calculated levels, which was, and I came up with 2246 and 2292. The 2246 would probably be the one that I would have taken. I had a the high of this candle here was 22.45. I had an order in for 22.46 to short HPQ. It never got triggered, and then we had a huge drop. Okay, so unfortunately I missed this trade. Do I see HPQ heading lower? Yeah, it's possible. I mean, if we start consolidating again, then that's a possibility. But the 50 moving average is so close, I would not consider taking a short trade as of now. It would just be chasing, and I believe HPQ, I don't see any earnings coming out yet on this chart, but I would have to check the Yahoo earnings calendar. But this is just something that I wanted to show you guys. Again, these calculations aren't 100% accurate, but they get pretty close. Okay. So with that said, what I do is when I do my analysis on charts, I just I find good charts that I like, and then I have it in my watch list for the week. And every week my watch list obviously changes because I'm not a trader that's going to hold on to a stock for weeks. I want to be in and out as fast as possible, as you guys been witnessing. And in last week's video I just went down the line and picked random stocks from my watch list, and it's just because there's a lot of stocks in my watch list. I don't want to make the videos way too long, so I'm gonna do the same thing with this video here. And every week, if I look at something and then I don't mention it the following week, it's probably because I'm not interested in that stock anymore. So the first one I have on my list is USO. Let's take a look at that. Alright, this is the daily chart of USO, and this is oil. So I drew this bottom trend line here, and I don't know if I mentioned this in the previous video, but at least this is my thought process. If you break down from this bottom trend line here, then this on higher volume, which is what we got, okay, which is a good sign to me, this is something that I'm going to keep my eye on very closely. Why? Because if we do on Monday get a close lower than this candle here, then this validates this breakdown. Does that, at that point, am I going to short USO? No, absolutely not. If we come straight down all the way into this 31.08 level, then there is a potential that I may consider taking a long trade for a little bit, and then take my money and run, and not hold it. I don't know if oil is going to hold. It really depends on the pattern when that day comes, if that day comes. So that's scenario number one. Scenario number two is, this is the one I'm waiting for. We get a close below this candle here, and this has to be done on Monday. Okay. And then we kind of continue down, and let's just say we end up around here before the 31.08 level, and then we pull back, or we bounce already into this bottom trend line. This is a retest of this bottom trend line. This is when I initiate a USO short. It may take a while. It may take all the way up to here, and this would be a perfect scenario if we hit the bottom trend line and into the 3311 resistance level, then I will be pretty sure I will probably be taking a short trade here. And the reason why I like these trades, it's simple. Actually, it wouldn't be over there. Let me just extend this drawing over here. It'd be somewhere around here. All right. So the reason why I would short it at this level, or any level, like even over here, if it happens sooner, is because my stop will be any close, and maybe if I want to validate that close with a close above the previous candle here is my stop, and my stop is just going to be so little that my losses will be very little. But what I'll be expecting for is a pullback, and if I do get that pullback, then I can expect that pullback to be from here all the way down to this 3108 level. Okay, so that's a $2 pullback. That's the USO. That's what I'm waiting for. Alright, this is the daily chart of Sears, SHLD. Okay, I don't know if I talked about this in the previous video, but I've been also watching this. I had a level here at 53.64, which just so happens to line up with the 50% Fibonacci retracement levels. Again, I don't normally do my analysis using the Fibonacci retracements because it doesn't really work well for me. I know it does work for a lot of other people, but it's nice to see if it validates my calculations. Sometimes it lines up perfectly like this at the 75. As we have 6054 is my calculation, and the fib is 6108, so that's pretty close. And then obviously at the 50% level here. So I created this one back in, let's see, the 1st of January. I'm not the first, 23rd of January. We get the resistance here one time, we get resistance here another time, and the reason why I didn't take a short trade at the resistance the second time is two things. First thing is it already hit this level, so I can't trust it anymore, but I will watch for a breakout. If it does break out of this level and it breaks out cleanly, then obviously this will now be support, which is why I leave these levels in. It hits it again. He pulls back. Why didn't I take a short trade on this? Simply because all the moving averages are right here. It's going to give it some floor room, some floor support, some little bit more support than if there wasn't anything there, basically. If we can get into this bottom trend line here, will I take a long trade? Probably not. But what I want to wait for is possibly if it gets up into this upper trend line here, and then my stop out would be any close above it, or if it can possibly get up to the $60 level, that would be great. Right now, Sears, and again, I'm not a fundamentalist, but it just doesn't seem right that Sears would be bullish in any shape or form right now. They're not doing so well financially. They are closing some stores, so I would be looking at the short side rather than the long side on Sears. But just keep in mind that it could be a buyout candidate. We never know, right? The markets are just, we don't want to be gambling. We just want to make sure that the odds are in our favor, and that's why we use technical analysis. Okay, this is the chart of BAC, Bank of America. Same thing. We have this bottom trend line over here. If we break this trend line, actually this trend line could also be drawn this way. Okay, so just keep your eye on that. If we break down from this trend line, same theory. We wait for the breakdown. Breakdown has to be done on high volume. Then we have to get 2 consecutive down days of lower low candles. Okay, and then when we get a pop up back into this bottom trend line is in which case I will short. Keep in mind that BAC will be releasing earnings on the 17th before the market opens, so that here will have an effect on how this operates. But that this chart is still a good chart, so we just have to watch and see what happens. If it's too close to the earnings, then I probably won't play it. This is a daily chart of Ford. I know we talked about Ford in the last video. I didn't replay the video, so I don't really know what I said. But this line, bottom trend line here, held up. $12.45 was the support level, the mathematically calculated support level. We got a nice pop in Ford. Too late now to go long. I'll be honest, I didn't take this trade. And the reason was these two moving averages here were too close, but we just pushed right through it. Keep in mind, Ford does have our earnings before market open on the 24th. XHB, this is the home builders. Same thing. Bottom trend line here. Watch for a breakdown, a pullback, and then another pullback. And if it does do that, then that's when I expect a correction to happen. Just keep your eye on the 200 moving average here. If the 200 moving average is too close, to the breakdown, then it's really not worth, in my opinion, to take the trade. But if we break down soon, and we would have to close probably below here for me to even consider it, that's still gonna be a $2 move down, so it wouldn't be such a bad idea. Okay, QCOM, Qualcomm, same idea. Wait for the breakdown. Right now, the stock is in an uptrend. There's nothing telling me otherwise. Alright, ABX, and then I'm going to jump right into the GOD, which is the ETF for gold and SLV. I'm sure a lot of people want to see that because I'm watching that very closely right now. I'm seeing some support on the ABX at $18.50. Okay, if it can get there, then I may consider taking a long trade on the ABX. Okay, just keep that in mind. That is a possibility. Keep in mind also that the ABX is releasing earnings on the 24th. So if we can get there, say in 2 weeks, then I'll probably take a long trade. Okay, but if we get there way too close to the 24th, then I may consider not taking a long trade on ABX. Okay, but this green line here, as you can see, will have some support at the double bottom over here. But I do have a mathematical calculation at 1850. So I could take it at 1850, a long trade, and let it bleed out all the way down to the low of this, which is 1727. That's going to be a dollar something um, loss, and then stop myself out if I get a close below here, and then it'll probably be, I don't know, a dollar, maybe a $2 loss. So the losses wouldn't be too bad. Um, But because the 1850 level is so close to this double bottom, I'll probably wait for the double bottom. Again, these calculations aren't 100%, but they do work. So they do come close, and this is close enough for me to wait for the double bottom. That way I won't lose as much. $2 is still kind of a lot for me to lose, but it really depends on how much the stock is. If this was a $600 stock, then a $2 loss is not a big deal. But if this is, again, here is it would be a $18 stock at that point, then $2 would be a little bit too much for the losses. Alright, this is the daily chart of the GLD, which is the ETF that tracks gold. And this is, I've been talking about gold for a long time, and silver. Actually, I haven't been talking about it for a long time, but I have been saying that it's very weak. And sure enough, it is showing its weakness. Right now, we are into support, okay, as of now. Um, but you see this volume candle here? I mean, it's just ridiculously high. Okay, this is the daily chart. I mean, this we never had volume like this since back in 2011. So this validates this move down. Okay, so I think that there is a possibility that we could head lower. Just because we're into support here doesn't mean I'm gonna take another trade based on that. So give me 1 second, be right back. Let me get some calculations in. Alright, believe it or not, I have a calculated level for. Okay, but let me put a disclaimer in here. I don't think this is gonna hold up. Well, let me put in a disclaimer here. I'm not taking a long trade based on this level here. I have a level of 142.88. So in my opinion, I will not be taking a trade here. I do not think that this is going to be a strong support level. And the reason is we had a lot of volume on this down candle here. Yes, Grant, I agree with you that the candle is long. It's a long down day candle with high volume, which could potentially mean that we could get a bounce. So that's I'm not gonna argue with anybody on that one. And we did get, this could be considered 3 consecutive days down. We got 1, 2, 3, and then this would be the fourth, which means that does fall within the pattern of it being, being able to be a pivot point. Okay, so we may actually get a pullback to at least 50% of this candle. Just keep that in mind. Remember this, what I'm saying. The pullback, not pullback, the bounce may be about 50% of this candle. However, 142.88 is a mathematical calculated level that we've all been watching. It is unfortunately the only one that I can see that would be a valid move for a bounce. After that, the calculation does not exist. So we would have to go. We would have to do a manual. We'd have to do this manually, and I see some consolidation around this area over here. So around this area around here, so around the 138 138, 139 area around here, but we have consolidation there. So all right, this is what I like. I like this here. We have a gap. Just zoom in over here. Okay, so I like this area here. We have a gap window, a gap fill, and we have this pivot point right here. I like this area. Extend to the right, go all the way back. This area right here, which is gonna be around the 134.87, 134.81. I doubt gold gets all the way down there, but if it does, then I think that's where we would bounce, and we would have to go straight into it, meaning we get down consecutive down days all the way into this level, and that's only about, that's a $10 move, and for gold, a $10 move isn't such a big deal. I mean, unfortunately, and this is the kind of things that sometimes these levels they give me some heartache. The high of this candle here was 174.07, as you can see up here. The high of this candle was 174.07. My calculated level was 174.29. You see how close that is? Unbelievable. It didn't. My short order did not trigger. Had it did trigger, I'd be I'd be smiling really big right now. But you know, to be honest, that's the game. That's how it goes, right? I mean, it's a business. Sometimes you win some, sometimes you lose some. Next is SLV. As far as the GLD, the previous chart, again that level, the 142.88 is not something I just put that in there because that's what the calculation spit out, and I'm just curious to see what's going to happen. All right, so this is the chart of the SLV, which is the ETF that tracks silver. All right, so we talked about this minimum pullback here, and we've already met that minimum. We consolidated. We talked about how silver is still bearishly weak, and sure enough, silver has been breaking down just like gold, and just like gold, we had a lot of volume in this down candle on Friday. All right, so we are into support just like gold back here. Doesn't look like silver got that the intraday bounce like gold did. Let's see if we can zoom out a little bit more here. Yeah, so I don't see anything on that. Alright, so let me see if I can get a better calculation on silver rather than I did on gold. And then give me a few minutes, I'll be right back. Alright, unfortunately, just like gold, my calculations aren't spitting out anything reliable. Okay, so I'm not even going to go there. We're going to have to do this analysis. Unfortunately, we're going to have to do it manually. And I do see here a nice area that I like a lot. We have this pivot point, we have a gap, actually the gap would be here, and then we have this pivot point here. So around this area we have this pivot point here, okay, and then we're gonna have this area right here. So I think silver, I wonder if this is where it is now. Let me just extend this to the right. This is possibly where it is now. Oh, it's almost there. I think silver would have some support. I would wait for it to go down here just to be safe. And again, we may actually already get a bounce on Monday, and this week will be a very volatile week, so just keep that in mind. Around, just to be safe, I would say between these two lines over here would be a nice long trade for silver. For some reason that is very crooked, so let me just delete this and get my price level. No confusion here. I am not these are not my mathematical calculations. Please forgive me here. It's taking me a while. Oops. Okay, I'll be right back. Alright, I'm back. Boy, that was an issue for some reason. Okay, so there's a $2 difference. I like this area between these two lines over here. If it can even get there, we may potentially already get some support because of this gap and this pivot point over here, so just keep that in mind. But if it does get around this area, that would be very interesting. That would be very attractive for me to around this area over here. I'd be very interested in going long silver around these areas over here. But silver could already potentially get a bounce, being that there is a gap and a pivot point a little bit earlier that would be around this area here, which is about where it's at now. So because because there was high volume on this down move here, we may already get a bounce, but I just don't like the pattern, so I want to wait to see a better pattern. So I would wait for it to get in between these two, $24 and $22. Okay. All right, 34 minutes, 6 minutes less of actually 35 minutes, 5 minutes less of last week's video. So hopefully the next videos aren't as long. I want to try and rip through it as much as possible. I do have other things in my watch list, but hopefully I got through what should you know be moving a lot more next week. And thank you very much for watching this video. Good luck to your trading next week. God bless to you all. I'll try to be more active on Facebook. No guarantees though. Again, I do have a full-time job like you guys do. In any case, have a good weekend, rest of the weekend, and I hope to see you